That's all good. Chris, have we got you there because you're at the start?
Yes, I'm here. I'm here, definitely. Good evening, everybody. Can everybody hear me all right?
There we go. I've got you there loud and clear now. So I think we are all good. And I can see that a couple of you have given us a thumbs up in the Q&A box as well. Very much appreciated. I think we're probably all good to go. So before we dive in, obviously just the standard health warning that we're here to give you some general information. Neither Chris nor I are qualified legal, financial, or accountancy advisors. So just bear that in mind, but we have been knocking around property for a fairly significant amount of time. So hopefully we've got a few insights for you in the property market. See lots more people joining now as well. There's my friend Mantha, good to have you on. Mantha, haven't seen you for a little while. Congratulations on the progress of your portfolio as well. Good to hear that's going along so well. So let's do a quick intro, because I know we've got a mixture of some people here this evening who have met Chris and I before in various different things that we've done, and we've also got some people who may not have met us before. So quick 60-second intro for me. Arden Hanley, grew up in Australia, came to the UK in 2006. Back then, I had quite a bit more hair. That was for my former life. I was a radio producer. That was my first career. And that's what brought me to the UK. And I would describe myself as a radio producer who dabbled in property at that point in time. Knew it was a great way of generating long-term wealth and financial security, so I started getting serious about it. 2009, 2010, started building my portfolio. My progression basically went from buying distressed properties, always bought distressed, love a good wreck. And I started off with internal cosmetic refurbs, turned them into buy-to-lets for private tenants or social housing. Moved up into HMO, once again, private or social housing, onto small blocks of flats, freehold, leasehold title splitting strategy. Spent most of the last few years on commercial to residential conversions. And as I've got braver, less bits of the property left there to begin with. Now 3 walls and half a roof. Doesn't really scare me. Done a reasonable amount of lease options, also raised creative finance, ran a sourcing business for about 7 years. So I've done quite a few different property strategies over the years. Over to you, Chris. Tell us a little bit about your background in property.
Well, you've got this joint accent, I've got the Scottish accent. I live up here in the Scottish borders, not that far south from Edinburgh. Prior to property, which I started getting involved in 2004, I was involved in the hospitality industry, running restaurants in London. And then I got involved in the software side of the industry, selling point-of-sale systems, hotels and restaurants, very much at the top end of the marketplace. As I said, in 2004, myself and my wife Ross decided to make a big change in our life, and we started investing in property. Starting off with the smaller properties up here in Scotland, great cash flow from flats, so lots of flats in the portfolio, doing some flips as well, moving into HMOs, working with distressed landlords, giving them solutions for their problems, giving them options out, and then also moving up and getting into some land deals as well with that. So again, a big broad base of property knowledge over the years built up, but also spent a lot of time helping people, coaching and mentoring so they can learn how to build their own portfolios, creating their cash flows want. And there's some people on tonight I've been working with, and you'll hear some stories tonight through the slots I'm doing about some outcomes of working with people and how it gives them the springboard to move forward and the confidence to do that. And as you both heard, Arden and I started off with those small buy-to-lets, but over time and experience and surrounding ourselves with the right people, we managed and decided to go on to those bigger things. So like Arden, 3 walls and no roof is not a problem now, but if that was at the beginning, I would go, no way am I going near that. But that's just by making sure you're surrounded by the right people and taking that guidance and support with that. So I think that's enough about us. They're not here to hear about you and I, the two balls. They're here to learn some information. So why don't we crack on with that, Arden? I'll hand over to you and you can take them through the first few sections. I'll turn off my camera. I'll be back shortly to join in.
Okay, brilliant. Thank you very much, Chris. Actually, just before I do get into the meat of this, Chris touched on that just then. We're both very much involved in training people, helping people, supporting people as they grow their property portfolio. Chris and myself, both members of the Property Educators Accreditation Scheme, also affiliated with CPD as well, Continuous Professional Development, because we're very, very big on standards in the industry, making sure people do this correctly, do the right thing, and get the right results from their training as well. Here on Wealth Labs, and I'll touch on this again at the end, few resources apart from great free webinars like this and interacting with the rest of the community as well. In the Property Squared section, we've got some short courses, Profitable Property, Introduction to Sourcing. A lot of our material that we have up here available for people to tap into is related to sourcing property and building a portfolio, property wealth creation as well. Property Foundations, we're taking enrollments for April. That's an entry-level course to get people started off in the property business, combination of group coaching, also some online learning and one-to-one sessions to give you a springboard. Property Sourcing Business Blueprint for those who would like to build a successful sourcing business. Also, we're launching in April our Residential Property Investment Masterclass. If that's something you're interested in, please just send Chris or myself a private message on Wealth Labs to register your interest. And also, we've got our Property Market Expert Community, and that's something you can join as well if you want some ongoing support and updates with what's going on in the property market. But let's dive into our main topic tonight. So where are the Propportunities for 2023? And starting off with a bit of an update on the market, and I suppose taking stock a little bit and maybe a little bit of a reality check as well. Let me ask you guys before I get into this. 2021, 2022, the market was going a little bit crazy in some parts of the UK. Give me a wave or a thumbs up if you guys kind of agree with that. Yeah, quite a few of you have kind of seen that in your market. The kind of COVID bounce. We had the stamp duty holiday. We seem to have a whole bunch of people saved a lot of money. Maybe they went out and got half a dozen business bounce back loans in various companies to build up their capital pot. And suddenly it seemed like the whole world was out there shopping for property. And we also couple that with, we've been on a run for a good 10, 12 years now of really, really low interest rates. And I'd probably describe the last 6 months of that hot market in 2022, so January through to August, as stupidity from a lot of people. You know, I saw a lot of people in the marketplace bidding on properties, offering on properties, paying maybe 10, 15, 20% more than a sensible professional investor would pay. Let me know if you guys kind of saw that as well. It was almost like everybody thought that, you know, there's only this finite amount of properties in the world and the world's going to end tomorrow and I better get in before it all stops. That was certainly my impression of doing it. I remember seeing a HMO sell in Nottingham, which I looked at and thought that's probably worth on a good day about 200, 210,000 for a 6-bed HMO based on the rent it was capable of generating. And the person who bought it spent £290,000 on that. Rental yield of about 7% on a HMO, which is not enough to make that deal work, even if you are down at probably when he was purchasing kind of 2.5, 2.9% interest rates there. The good news is, I would describe what we're seeing in the marketplace now probably as what I would call a little bit more of a normal market. Okay. And what I mean by a normal market is, you know, now if we look at what's going on with asking prices and looking at the RICS market sentiment report, asking prices, some agents are still reporting they're selling a little bit above asking. Okay, which is great for the sellers they're working for, because let's remember agents are working for the sellers. And so getting best price for their seller is good for somebody. May not be good for you or I as investors, but it's good for somebody out there. A lot of agents are reporting that the majority of stock in their area is selling at around asking. And probably the other third of agents are reporting that they're getting quite a bit of stock selling a little bit under asking as well. So if I look at that and I kind of look at the history of the last kind of 13 years, almost 14 years that I've been in the UK property market now, I'd say that looks a bit more like a normal market. Some property, well priced, selling at about asking, probably the stuff in good condition, where there's maybe some active first-time buyers in the marketplace and things like that. Some stock selling for over asking, maybe that really, really good stock where you get a bit of a bidding war. And some stock, probably the run-down stock, the type of things that we're interested in, selling for a little bit below asking as well, okay? Now, I do know saying that looks like a fairly normal market. I don't think we're likely to see in any posts online or in the media at any point, anytime soon, a headline that says property market behaving really normally. I still expect that we're either going to see headlines that say unexpected boom in the property market or will house prices continue to drop, okay? Because in order to get attention, normally people have got to go out there grabbing a headline. But if we drill into this a little bit more, okay, so a lot of stuff is selling around asking price, but in contrast to maybe 7-8 months ago, it's not selling above consistently anymore. We've got buyer and seller registrations down, and those are the charts you can see on the screen. We've got the balance of stock, the newly agreed sales, and we've also got the number of buyer registrations and number seller registrations. And we can see back towards kind of September, October last year, pretty much every chart took a dip. And that was very much the truss effect, okay? That kind of budget which spooked the financial markets, caused that big spike in interest rates, caused everything to go topsy-turvy. So we saw basically almost a shutdown of the property market for about 3 months. Certainly, if we look in lender terms, the majority of lenders pretty much just, you know, put the sign up on the door saying we're closed for business and try to deal with what they had. It was January before they came back into the marketplace. And then as we've started the new year and people have realized that it hasn't been the apocalypse, we've started to see things start to happen in the marketplace just a little bit more. Buyer registrations and seller registrations are both down on where they normally would be this time of the year, and they're both down on this time last year, which we've got to remember we're in the middle of a boom this time last year. But both of them are coming up compared to where they were in January, compared to where they were in December, November. So we're going back in the right direction. The other thing that I think is interesting from looking at the market sentiment survey is time on market is going back towards something that we would consider normal. What I mean by that, those of you who've had a bank valuation on any of your properties recently will know that most of the time when you get a survey or valuation done for the bank, they generally value on a 90-day basis. 90 days on the market, 3 months on the market, you should achieve a reasonable price for your property. And we're starting to get closer to that 2 to 3 months marketing to sell a house. Gone is the 2 days to 2 weeks marketing. There's also a bit more stock popping up, and this is the first opportunity that I would suggest you start looking at. And I know Chris is going to dive into this a little bit more shortly, but there's a bit more stock popping up on the market now in that 3 to 6 months on the market, starting to get stale, or the 6 months plus on the market. Now, as you're looking at your local investment area and you're looking for those opportunities, do remember some of that stock now that's been sitting on the market for 6 months plus probably went on the market last year. Someone thought, if I get a sale, I'm going to get a really good price because the market's gone nuts. They weren't quick enough to get it in before we kind of got to the end of August and the wheels came off. Since then, financing's changed. There's a lot more negative news in the newspaper, but that person was in a position where they wanted to sell. What do you think has happened to their mindset over the last 6 months? And is there potentially some stock that less people are looking at because it's not new and fresh anymore that you might be able to tap into that sat on the market, possibly even had a sale agreed middle of last year because conveyancing was taking so long, that's fallen out of bed, and now you've got potentially a more motivated seller back on the market. So that's definitely something I'd be looking at. House prices. I always find interesting when I'm looking at house prices, the difference between what I hear and see and read about house prices and what the actual source data says. Okay, so I've heard so far since the start of the year that the property market, even though it had a little blip at the back end of last year, we're on track for another boom this year. I don't believe that at all. I've also heard that we're in the middle of a house price crash and house prices might lose up to 20–25% worth of value. I think that's complete bollocks as well. I'm sure I can say bollocks on this webinar, hopefully. I've also heard slightly more sensible things predicting drops 5 to 10% as well. Okay, so I've heard quite a few different things. So if I, am kind of hearing all of these things, I'm going to look for credible sources to try and get to what is the truth of what's going on. Two go-to reports for me: Halifax House Price Index, Nationwide House Price Index. Disagree on where we are at the moment, not uncommon. Halifax saying we're 2.1% up year on year compared to this time last year. So that's definitely not the apocalypse. Okay, that's modest growth. It's certainly not a boom either. Nationwide saying we're 1.1% down on this time last year, year on year. Truth is probably somewhere in between. That to me looks like we're pretty flat in terms of house prices. That's the way I would interpret that. Okay. Transaction volume though, this is interesting. Okay. August 2022, there was a big peak in transactions. We look at some points over 2021, 2022. There's a couple of months where you had transaction volumes up around 130, 150, 160,000 properties transacted in the space of a month. In reality, the normal level for property transactions in a month across the UK is around the 100,000 mark. And in February, there were 96,000 transactions. So we're pretty close to what looks like normal. Now, there were a couple of months, notably October and November, where the transaction volume dropped drastically down to about 60 or 70,000 transactions, while the whole market was maybe in a state of turmoil. But to put this into context, okay, what a house price crash really looks like. Remember when the housing market crashed back in, 2008, and we look at 2009, 2010, you were looking at monthly transaction volumes in that period around 40, 50,000. So if I was seeing transaction volumes consistently down at that level, I might be more concerned about the state of the market, but being a bit off 100,000, once again, it looks pretty normal, okay? Mortgage approvals are down a little bit, okay? Mortgage approvals normally sit at around 60,000 a month, okay? They were down at about 40,000 for the last month, but how much of that is also a little bit of a reaction to the number of mortgage products that were on the market in August last year, came off the market very quickly in September, and now have slowly come back onto the market. I think that's more a reflection of maybe some of the banks and big lenders getting their act together again, rather than the health of the market overall. The other thing I'm also always mindful of when I'm looking at house prices as well is looking at some of the predictions from some credible sources. So things like Savills Market Research, Knight Frank, some of the economists who comment on this regularly. And if you look at the broad spectrum of opinions, most credible people who know about the housing market, we're predicting a 5% drop in house prices for 2023. Okay. Now, the interesting thing, if you dug into the detail for most of that, is they were predicting a 5% drop in house prices from the peak point when we hit the end of August 2022. Now, if I look at the month-to-month figures rather than the year-on-year figures, the market kind of went from about January, February last year, it went up like that. And then it hit August and everyone went, oh my God, what's happening with Liz Truss? And it came down a little bit and now it's found a water level, which is maybe just slightly up, just slightly down on last year. It looks like we're in the little trough at the moment. It doesn't look like there's a whole lot more room for house prices to go down. So for those people who kind of pose this question to themselves sometimes, and I know because I get this question from some of my students working in group environments or one-to-one who say, am I smarter just to wait, you know, maybe a couple of months or wait till later in the year to see if, you know, maybe house prices will drop a little bit more and I can grab a bargain. I'm looking at this right now and I'm saying, I don't think you're going to see house prices drop much more than this. And I would actually say genuinely in any property market, up, down or sideways, your ability to grab a bargain is down to you putting in the effort to build relationships with agents or direct to vendor business, putting in the offers at a level that works for you and following up those opportunities. You can grab a bargain in an up market, a down market, a sideways market. Don't fall into the trap of trying to time the market, because chances are you'll be looking back in 5 years going, oh, that person bought 4 properties and I've not bought anything. Well, you were busy timing the market. Someone else was busy building their portfolio. Do you guys get what I mean when I say that? Give me a kind of wave or a thumbs up if that makes sense. And Kevin, I love your comment there on interest rates as well. I agree with you. Interest rates now are much more realistic. This is a much more consistent long-term level. The fact that now I'm looking at rates on the majority of my portfolio sitting somewhere between 4.5 and 5.5 on buy-to-lets and maybe 5.5 to 6.5 on large HMO semi-commercial stuff that I've got, that looks to me fairly consistent with you know, where I think things sit on the long term. Love your comment, Richard. Time in the market, not time in the market. That's a really good way of saying that. Thanks for sharing that. So that's my view on what's going on with prices. What about rents? Well, rents is where I think there's a really big opportunity right now for landlords. And I want to speak to 2 types of landlords at the moment. If you are going through the purchase of a property right now, I would say, especially if you're doing a little bit of a refurb before you bring it out to market, get that property on the market, testing the rental market at the upper end of any comparables that you've got a few weeks before it's ready to actually show to people. Because at the moment, if you look at most of the UK, rents are doing absolutely brilliantly. If you're in a position where you've already got stock in your portfolio, I'd be having a look at what's going on in your town, city. You can look at some of the regional figures here on the slide from the Home Let Rental Index. You can see year on year, we've got over 10% growth in rents for London, the Northwest, Scotland, Wales. Rest of the country pretty much completely is over 8%. It's only the Southeast that's just under 8%. Predictions for this year from quite a few sources, 5 to 10% up, depending on which region you're looking at, and 20% up by 2027. That's some big growths in terms of rents. Unsurprising, because rent quite often is linked to what's going on with inflation, and inflation is up at the moment as well. But what this means is be bold if you're doing a refurb right now, or you've bought something and you're about to let it out. Ask for a high level, do it early, because you can always be in the position then that if you have been a little bit top heavy in your asking price, if you've got 3 or 4 weeks before the property's ready to move into, you can always wait till 1 to 2 weeks out and drop the price to a more realistic level if you're not getting the inquiries, but use this as a moment to get the best rent you possibly can. If you're in a position to, you know, kind of work with your existing portfolio, for a renewal of an AST or a PRT, ask high. Okay, start off with your ask right at the top of the market, and then if you've got good quality tenants in the property, give your lettings agent maybe some room to negotiate a win-win. I did that on one of my properties. I mean, this sounds quite drastic, but this is the nature of the market at the moment. Little mid-terrace ex-local authority buy-to-let. Tenants are currently paying $575 a month. Spoke with the lettings agent at the end of last week. Market rent on that property, you'll probably almost fall off your chairs when I say this. I almost did. Market rent on that property now is $850 a month. The lettings agent went with $850 a month as an ask to the tenants. Now I looked at that. These guys have been great tenants. They've been in there about 7 years already. They're low maintenance, all of those kind of good things. So I don't want them gone. The tenant came back, looked at that and said, we could afford to pay $700 a month from our renewal in June. we could go for 775 next year, and we could go to the 850 in year 3 if the landlord was happy to sign a 3-year agreement. And I went, you know what? I get right to the top of the rental market. Yes, it's over 3 years. It takes a little while to get there, but I've got £125 a month rental increase there in one hit, and I've locked in a really good tenant for another 3 years. So look for those opportunities at the moment. If you've got a tenant who's on periodic, remember you can serve a Section 13 notice once a year. That's an increase of rents. You can push it right up to the market rent. Doing that protects your position, that if it's not challenged, then the tenant has to start paying that. If the tenant does look at it and go, that's a bit heavy, then enter negotiations at that point there, okay? So just bear that in mind. I'd look at that with rents. And in terms of house prices, to sum it all up, I'd probably say, what crash at the moment? I think we've got a case of probably people overpaying, certainly May through to August last year. Things have become a little bit more realistic. That said, some of the stuff that's out there in the news at the moment, recession fears, even though most of the indexes seem to be saying we've not gone into recession, we're in modest growth, okay? Very modest growth, but certainly not in recession. Utility costs still spooking people, inflation worries. If you are talking with a seller of a property or talking with an agent, and they're trying to talk up the market and the value of their property, remember you've got some ammunition at the moment to counteract that with what's going on in the wider economy overall, and asking that key question. Would you rather get a deal agreed today at the reasonable price that I'm prepared to pay, rather than wait for this theoretical price that's in fairy tale land that you're asking for and trying to get that tomorrow or 6 months or 12 months from now? And that leads me very neatly on to handing over to Chris, who's going to talk about putting together some opportunities and how you approach this market and maybe carve out some things to make some things happen. Who's selling and where those opportunities might be coming from. So Chris, take it away.
Thank you, Arden. Thank you for that insight into what's happening in the market today. This next section follows on for that, because when we're in a market, there's a lot of fear around of the unknowns of what's going to happen in the coming months and the coming years. It does create a lot of opportunities for us. And this is where we can then go and help people to get over what their current situation is. And a lot of the time, it's through no fault of their own. It's external forces that can put you in a position where you can be the person to come along to offer them the price for the property. They go, yes, that gets me out of that awkward position. I can move on in my life. And you end up that cash flowing property. So what I want to do here to look at these kind of opportunities, we want to sort of have a look at sort of who we can be approaching and why they might be open to that. So on the next slide, we're going to just start off with the homeowners, people who have currently got their home and they could have some challenges within their current circumstances. So why might these be people who are finding challenges with it, and why they're going to be concerned sellers that we can approach and help? And we're going to talk a bit later how we can find these people to offer them that solution to their problem. Well, of course, as Arden has just said, there is a lot of challenges now in majority of people, a lot of people's households around the cost of living. And of course, the media just now is just bombarding with us. I'm actually at the stage I turn off the news. I'm very particular what I'm listening to, because it's all very negative. We can almost feel as though we're talking ourselves into a recession. And as Arden said, in actual fact, are we going into a recession? Now, at the beginning of the year, it was recession, recession, recession. Then when the figures came out, actually showed growth a lot better than they thought. It's not been on the news. They're not talking down a recession now, they just stopped talking about it. And that's just where we live. But the biggest thing we've been living with is inflation. You know, now it has reduced from January of last year to where we are today, but inflation is there, but it's always there. And this is something that the public generally don't understand. They just believe when it goes zooming up the way it has, and we have the impact on the cost of our food, the cost of our fuel, the cost of all our living expenses. And of course, that inflation eats away at the money we have. People don't realize it's all there. If you think what the Bank of England are targeted with, they're targeted at keeping inflation at 2%. That means their job is to keep inflation rolling. eating away the value of our money. So every year we're getting less and less for our money. Now, if we actually look at the history of money, of currency, up until the 70s, when we came off the gold standard, there wasn't inflation. It's as soon as we came off the gold standard, inflation started to hit in our pockets and started nibbling away at the money that we have. So this is what we are battling with. Now, of course, the government is saying, oh, by the end of the year, it'll be down to 2.9%. How do they know that? Because most predictions that are made by the economists are pretty much always way out, but politicians and economists keep on predicting it. So sometimes we just have to fight through the information and understand what we are. But for the majority of people, they aren't able to do that. They just hear the chitter-chatter out there. As Arden said, property prices are going to crash. Well, as he's just pointed out, we don't believe they are, all right? There's going to be a leveling off, but not a big crash. And it's exactly the same here. People are now naturally and understandably very concerned because they are getting less bang for the buck. They're getting to the end of the month and there's less money with that. So that is internally putting in a lot of pressures into households to be able to pay for their gas and electric, paying for their mortgages, paying for other fees and costs that we have, their insurances and all those other things we have coming into our households with that. Those are external things that we cannot control, that's out of our control. And this puts that pressure on us because, as I said, the majority of these things we can't control. The government are putting financial pressure on us as well. Just now we're at the highest level of taxation we've ever had. So again, we have that, national insurance, pension contributions are all going up. Taxes are changing. There's going to be more people into that 40p tax bracket in the coming months and years than has ever been there before. So again, that middle income is getting more money removed from them by the government, whichever flavour government in it generally seems to be the trend of what they're doing as under the progressive politics that we seem to be sitting in just now. It's all about getting more and more tax in, which is across the Western world at this time. The only way we can get more money in our pocket is by generating more income to help relieve this. But for a lot of people who are in the job market and don't have that additional income through buy-to-lets or other investments or other, the trendy word just now is the side hustles, is waiting for a pay rise. But in actual fact, most pay rises just now, and of course we've seen a lot of it going on with the strikes that we've had in the public sector and some private sector companies, is they're way below inflation. They're sitting around that 3.5% to 5%. Well, that's way below where inflation is just now. So even though they're looking to catch up in previous years' losses through inflation and taxation, they're still not there yet. So that puts more pressure on households. Yes, any pay increase for anybody is a great benefit, especially where we are just now with the cost of living, but it's not going to resolve all those challenges that we have today and potentially into the future. So this puts pressures on households. Then, of course, mortgage interest rates. Well, for those who are sitting on their fixed rates just now, we have many million who in the next 18 to 24 months are due to come out of their fixed rates. What's the market going to be like? Now, if you said to me in 2004 when I started investing that there'd be a big financial crash in 2008 and the mortgage market would just collapse, I'd have laughed. Yeah, right, really? Well, you should have seen it in 2008 for those who were in the marketplace at that time. There was a couple of months that every single day the mortgage market rates were chopping and changing. It was absolutely crazy all over the place. What I'm saying is you can't predict what's going to happen in the future. So there are a lot of people just now looking at the change of interest rates, especially after the Liz Truss activity in the autumn, and go, oh my gosh, we're still seeing the impact of that. If they actually look at it, there has been some reductions, but again, could they change with the coming months if there's going to be any interest rate changes from the Bank of England or any other central banks and the Bank of England decide to follow that. So again, people are sitting there slightly wary of what could be happening in 18, 24 months. Now, for a lot of people who maybe during COVID were able to save a lot of money, they might be comfortable going, I've got that wee slush fund to cover that period until I'm able to put onto a new mortgage. While there's others who are maybe just now in a position where they're on a non-fixed package and they just can't get to a fixed deal by a lender because of all the costs of what's going out in their household and what income they have in. So really what we have just now, we have a time where we have been before, after the crash of 2008, where we've got a lot of people who are in a position of pressure around their outgoings on their properties today and what could be happening in the future, the unknowns that are coming off the fixed mortgages, who could be looking for a solution to the problems that are maybe building up within their family circle within that household. And this is where we can come and help them. We can come as property investors, we can offer them a solution to move on from that. So that's where a lot of house owners are just now, unfortunately, at this time. The other area we can look at, obviously, are our landlords. It's our landlords. These are obviously the concerns as well, slightly different. But we also have to remember, as a landlord, the landlord can also have the homeowner's pressures as well. So for some of the amateur armchair landlords who don't invest correctly, they could be on this double whammy environment. They could be, I've got these pressures in the household, and I've got my 1, 2, 3 or 4 buy-to-lets, and I've got these additional pressures. Now, of course, some of them can be doubling up, as we'll talk about in just a second. Increased costs. Well, for every one of you as a landlord, any maintenance be done, we know the costs have gone up. You know, we had some stuff done in our own personal residence just after COVID finished. And some roofing board, as originally bought, was like £12 a sheet. It was shooting up to £60 a sheet months later. Now, we are fortunate, being a Scotsman's happy with it. We got the £12 a sheet. The roofer came back to do some finishing off, and he's telling me about these price changes. This is what we can get hit for by being in the market as landlords with the maintenance. So these costs are going up. These other costs are going up. You know, we can be paying more cost per hour for the gas installer, for the electrician, for the refurb team. These costs can go up. We can see our costs going up with our letting agents. And if we haven't factored these into our business model, these can have an impact. Now, where we've got large rises of rentals, that can cover that. There's a lot of landlords who've got properties in areas where they've maybe not quite seen the rental rise. So there's could be more impact in those areas, or potentially where we do good quality properties to rent out and we can get a premium rental because maybe of the mindset of that more traditional landlord, the properties aren't in very good condition. So they're not going to get that full market rental. They're on the lower end of the rental spectrum because they've not got good quality stock. And they've been told, well, to get the good quality, the good rental income, we need to get good quality stock. You need to go and spend X thousand pounds to improve this property. And that money might not be there. All right, so again, we've got this pressure on the landlords. Then, of course, they're in the same boat with the mortgage interest rates and the fixed mortgages as they would in their own personal residence. And of course, there can be a higher hit here because the interest rates can generally be higher for the buy-to-let, depending on your experience and your profile and the kind of property you're looking at. Also, we have to take into refinance here. So for some landlords who've been in the game for a longer period, they might be coming up to a stage where I actually need to be thinking about, I need to go and get my property refinanced. Okay, I'm coming off my fixed mortgage, or they might be coming to end of term. They've maybe had the low interest rates come to the end of the fixed term. It was on a tracker, so it was nice and low. All of a sudden, it's now started to step up. And potentially there isn't the finance package in the marketplace that fits their criteria, or they may be in one of the small pockets of areas where the capital growth still has not gone zooming up after the crash of 08, and maybe the pre-08 they've got 85% loan to value, and then actually now having to move to 75%, there's not enough capital there to pay that, and they don't have the differential to then go and pay. These landlords are out in the marketplace. We're hearing from these people, and they're starting to panic and worry about what they can be doing. Also, our capital allowances. The government have made changes on what capital allowances landlords can achieve on selling a property. It's not just landlords, it's across all different investments. So for example, just now, if someone's bought a property in their own name, they're eligible for £12,500. That is tapering down in a number of years to £3,000. So again, they're going, actually, I want to sell now because it might be a few years earlier, but I'm losing these allowances because the government is starting to get more and more of our capital gains on our properties. And for those in the limited companies, again, on selling, they can very easily get into the threshold where they're going to be paying that 25%. So again, they're looking at this, starting to go, can I get my properties moved quickly so I can benefit from the better capital allowances? Again, all these things are out of our control. They're out of the landlord's control, the property owner's controls, but they put these pressures on and they're looking for solutions. They're looking for people to help them out with that. We've had a lot of change of legislation with the landlord in the landlord market. Now, for ourselves, who are professional landlords, we don't have any problems with that. It's the landlords who've maybe done it incorrectly over the years, over the decades. So this is starting to hit them with the reduced taxation. We've got new legislation coming in around fit and proper properties that fit the habitation properties. All right, the legislation is changing. They're worried about what's happening around Section 21 in England for having your tenants move out. There's all these different things happening in the marketplace that some of the older landlords are going, do you know what? I've been in this game long enough. It's getting harder and harder for me. It wasn't like that when I bought my property 10, 20, 30, 40 years ago. It's now time to cash in my chips. And again, if they've got tenants in them, they're going to a smaller market. This is where we as landlords can come along and help them out with that. And a number of them are retiring. We've got a lot of landlords who are now starting to get age. They go, do you know what? I bought this buy-to-let back in the early 80s, late 70s, mid 80s, whatever it may be. It's now time to sell up. I've made some rental income. I've now got that capital growth. I'm selling because it's coming to those golden years. There's a whole number of combinations that we've seen at some other periods in the marketplace. And when we start to connect with these people and offer them a solution to the pressures they have, it then gives these opportunities to us that allows us to go and help them out and build our portfolio. And we can use some tools to help us to start targeting these. Because as Arden said, we can start to see the properties are now languishing on the market a bit longer. What can help us is to take away all the noise that is created by the estate agents. Oh, everything's selling quickly, everything's selling quickly. When I hear that, I just laugh. We know the estate agents manipulate the market. They keep their websites full of sold, sold, sold. We all get that loss of fear to encourage that sale in 2 days, whatever it may be. As Arden quite rightly pointed out, we're starting to get more realistic timescale of sales. But what we can do is we can go look in our investment area for the property owners who could be open to speak to us regarding helping them out of the situation. And here we have a couple of screenshots I grabbed this morning from home.co.uk. All right, it's a tool both myself and Arden use a lot because it gives us an indication of where the property owner is. Now, random, you can see it's Bolton. I've never been to Bolton in my life. It's not an investment area I look at. For whatever reason, it's the first place that came into my head. So I went into home.co.uk, put in Bolton, and I just, in a couple of minutes, found these two examples. What we're interested in here is the price history. All right, we're looking to see how long these properties have been on the market for. And as you can see, all right, they've not been on for 2 or 3 weeks. They've been on a few hundred days. Now, if we look at the graph on the bottom, what's this telling us? All right, this is quite an interesting graph. What it's telling us, this property owner has put the price, so the property on the market with an agent at the initial price, that blue flat line on the left. Then suddenly it stepped up. Now, why could that have stepped up? There might have been a wee change in the marketplace that things were getting more buoyant, and the estate agent said, oh, we'll get more for that, okay? Or potentially they did some work on the property. All right, as I've never been in this property, I don't know. And the agent's going, actually, now you've done that, you've painted all the rooms. Yeah, I think we get a bit more. Then we've got another step up, okay? Again, were there some changes in the marketplace? We just don't know. The other reason that there could be those 2 steps up, potentially changed agent. Potentially they were approached by a second agent, said, oh, I'll get you more for that. They all come to you. We've got that first step up. It sits there, flat lines, because no one's buying it. And then another agent goes, oh, we can get you more for that. And they step up to that next level, okay? We only find out these by speaking to the owner to find out what's going on. Then, of course, they've now had a reality check, and that price has dropped back down to where they originally had it on the marketplace. What do you think the mindset is of that property owner? Are they all excited, or they're a wee tad hacked off? Of course, they're going to be hacked off. They're looking for someone to help them out. Now, as I said, I don't know Bolton. I've got no idea if this property be a great rental property or not. You'd have to go and do your local research to understand that. It's something that Arden and I take our students through so they make sure they are getting the right properties in the right location. But that's the kind of thing we're showing our students, our investors, what they want to be looking for, because there's a story in that property. We just need to understand that story. And the only person who can tell us that is going to be the property owner. So what about the one on the right? Well, it's a slightly different graph. Again, it's not just been on for a couple of days. It's been on for quite a few days now, all right, as you can see. You can see it started at a higher price and it quite quickly dropped down. And then it flatlined. Now, I hope it's big enough. Just along that flat line is a tiny little white space, all right? That indicates the property came off the market, then went back on. Generally, that can tell us that that property, an offer was accepted, okay? But obviously the offer, as we call it, fell out of bed. It didn't go through, so the property came back on the marketplace. No one else has come along. But at least what that offer indicated to the seller was, oh, that is a selling price. But then the blue line kept on going. So again, too highly priced. It's dropped down and it's flatlined again. And that's quite a bit of a drop from the original asking price to what it is today. On both those properties, if we approach the sellers correctly, there's a very high chance we can help them out, because there's going to be some of the pressures I've just discussed. If you imagine a lot of landlords, okay, they've obviously got their own primary residence as well, so they've got two lots of pressures. If these are ex-rental properties or rented properties, tenants in, just think of the pressure that owner could be under. They've got the pressure of this property that they're trying to sell. They're selling it for a reason. And then, of course, they've got their pressures at home as well. This is where we can go look in to find these concerned sellers that allow us. Please do not believe that the estate agent tells you things are moving quickly. There's a lot of stale stock on the marketplace. And a very simple tool like here, home.co.uk, can give you some indication. I know that area is where I want the properties. Look how long this has been on the market. I tell you what, I bet there's a seller who's very concerned, very frustrated, and there could be a lot of pressure. Can I go and relieve that pressure and find out what they really need for that property? And then I can then end up with a cash flowing assets. So just some things to think about when we're in this marketplace today is to go and find the people, and it's going to locate them. And we'll talk about that in just a second. So let me hand you back to Arden, because obviously we can also be approached and we can go looking for those landlords. So Arden, over to yourself.
Yeah, so this is where it comes in. You know, this is maybe an opportunity to engage in a little bit of landlord stalking. Just before I get into that, great tip from Petra, saying a lot of the information that you can pick up on home.co.uk, Petra uses a free browser extension called Patma, P-A-T-M-A, that attaches to Rightmove and gives you a lot of that history information as well. So there's a tip, couple of options to get to that. So first off, how to spot kind of landlord selling properties. First off, on Rightmove and Zoopla, the obvious thing is any property sold with a tenant in situ. And if I see a property advertised as tenant in situ, my first question to the agent when I go to look at it is to say, is the landlord selling anymore? Because there's two negotiations to be had here. The first off is, what am I prepared to pay for this one property where it works for me? The second question is, if this landlord has 3, 4, 5, 6 to sell, is there a deal to be done where I get a bit of a discount, a win for me, but the landlord gets a much easier life by selling them as a job lot as well? So I'll ask for that. But the other thing that I always look for on Rightmove and Zoopla, which is a giveaway that it's a landlord selling a property as opposed to a homeowner selling a property, is seeing the photos of an empty house with grey carpets and white walls. And as I'm saying that, I know a lot of you probably will have twigged, it's that kind of standard thing that the tenants have moved out, the property wasn't in tip-top condition, but, you know, it wasn't really so bad. So someone's come in, given a nice neutral coat of paint, put some neutral carpets down, and they're pretty much sold as is. You couple that maybe with a working but slightly older boiler, a kitchen that looks fine but is maybe 15 or 20 years old, and you've got a definite ex-rental property. So on those as well, I'm always asking the selling agent, are there any more in the background? The other thing that I'm quite a fan of is a little bit of landlord stalking. You can do this on Spare Room or Gumtree for self-managing landlords, straight to them, asking whether they're interested in selling properties if they're advertising them to let. Nothing wrong with making that inquiry, although do be careful on Spare Room. If you do too many inquiries, you can get reported and booted off there, because Spare Room don't think that they should be a landlord stalking service. They think they should be a room rental service. I might beg to differ sometimes, but it's much easier for me to run my business if my Spare Room account is active rather than getting booted off because I've flouted their rules. One of the other things that I see quite a few people doing, and I think this is a great strategy, but I see a lot of people getting this wrong, is getting a hold of the licensed properties lists for their local area. Most local authorities, you can, under a Freedom of Information request, request the Register of Licensed Properties. It will give the property address. It will give some basic contact details for the license holder as well. Okay. And this can be a great way of getting in touch with people who are existing landlords, people who might be interested in selling a property if you approach them right. Now, I say this because I'm on a number of HMO registers with my portfolio. So I probably most months get somewhere between kind of 4 and 10 letters a month. Okay. And I will share with you a common theme where people go wrong. I get a letter saying, have you considered selling your HMO? I am the best property investor in the history of the universe. I am ethical. I'm fully compliant. I've got a great photo here of me next to a flash car, or me next to my kids, or me next to my dog. I donate 10% of my profits to help starving orphans in some faraway country. I can solve all of your problems. I can pay above market rent. And I look at that and I go, first off, what you're saying doesn't appear realistic. And secondly, where's the bit that's in it for me? You've spent the whole of the first page of your letter explaining to me all about you, and I've seen nothing that's a benefit to me as the owner of the property. So simple rule of marketing, and those who've heard Chris or I talk before will have heard us talk about this. If you want something from somebody, you've got to give something first, and then you can ask for something back. Okay, very simple rule of marketing. Give something first, ask for something back. If I put that into the context of sending a letter out to landlords on the licensed landlord register for an area, that means one of two things I can lead with: either helping them with a problem or providing a benefit to them. Okay, so how could we structure this better? Okay, first off, we've got timing. Okay, no point in sending one of these letters offering guaranteed rent to a landlord, or offering to buy their property from them if they're sick of being a HMO landlord, if they only did their license renewal last month, because that person has already made a commitment to run their HMO for the next 5 years. That's how long HMO licenses last for. And any of the councils in England that have licensing of buy-to-lets, that's how long the licenses last for as well. So target those people on the license register that are coming towards the end of their expiry, 3 to 6 months before expiry. Now think about some of the things that might be weighing on a landlord's mind at the moment. Chris touched on some of these: health and safety, regulation, compliance. Kevin flagged this up. It's something that I definitely use when I'm speaking to landlords looking to sell at the moment as well. EPCs, okay, needing to get to a grade C rating, okay, remembering that we're E in England and Wales right now, D required in Scotland, C is the direction of travel. Now, most properties are going to require a reasonable investment to get to that standard. That's got to be weighing on some landlords' minds. Cosmetic refurb, carpets, paint, furniture in between tenancies. What about regulation creep more generally in the standard things we're used to? So fire regulations seem to be getting tighter every year. Emergency lighting regulations, repairing standards for HMOs. Double glazing has gone from a nice to have maybe 10 years ago when I did my first HMO to, on one of my recent licenses issued, double glazing was put on there as a license condition. Okay, so things like this can all start to add up. At that time, 3 to 6 months before license expiry, the landlord's thinking, how much hassle was this HMO? How much hassle did I get from my tenants in the last 5 years? They're thinking, they're going through that point. They're at the sell or keep scenario, so it's the right time to speak to them, okay? And they're making that assessment, is the profit I'm making worth another 5-year license fee? Am I ready to go again for another 5 years? Because if you're going to drop anywhere from £750 to £1,500 on a HMO license, yes, it runs for 5 years, but that's a reasonable upfront cost. You're going to want to know that you're making your money over that period of time as well. So knowing that, put yourself in the landlord's shoes and lead with, what are some of their problems? How can you help them avoid those headaches? Can you save them any money? Can you give them the same or more profit with less work? Even if you can only give them less profit, can you do that by giving them significantly less work so it makes attractive business sense to them? So that's how I would go ahead and approach landlords at this point in time, either as a rent-to-rent or encouraging them to take their capital gain, liquidate their asset now, and give me a great deal today. Chris, what about getting direct to vendor, not necessarily just for landlords, but more for homeowners and things? Because this is all about communication. In a market like this, where there's some negative economic news circulating around out there, this is going to be weighing on people's minds as well. This is a moment when people are likely to want to talk about this and get a solution.
Direct to vendor is available all the time, but we are definitely moving into a phase in the marketplace with those pressures we've been speaking about tonight, where there's going to be more and more opportunity with it. And there's a whole range of areas we can go pick these properties up. So when we're looking at our sales funnel, our sales hopper, if we just look at the estate agents, we've got the stock that they have. But there are a lot of people out there who have got challenges and they don't want to go through an estate agent. They're looking for people like ourselves to go and get that. I've got a list here in the right-hand column because it's not my main focus I want to talk on. So I want to give some tips about how we communicate with them, because that's where a lot of people do fail. But something like Facebook Marketplace, it's free. You can go to that local sales and wants in the Facebook page of the area you're looking, you run an ad. Facebook ads, now that obviously it's paid for, but it does work. Now, I was working with a couple this week, and they've just completed a deal which they got through Facebook ads. They were running ads, and since February, they've got 250 inquiries that they've been filtering through those. They got that deal. They finished the work on it last Friday. They had viewings on Saturday, and the property's already filled, making money. They're now going through the rest of the contacts and filling up their hopper again. All right. LinkedIn, again, they're speaking to them every time they've done a property, all right, as they're building their portfolio. They've always posted before and after pages on LinkedIn. And while I was having a conversation with them, it was actually last week, was my first call with them for a wee while, they're wanting to speak to me about how do you buy a portfolio. So of course, I took the call and I was very curious. And the lead, it came through LinkedIn. And because they've been posting these before and after pictures, one of their LinkedIn contacts contacted and said, listen, myself and my business partner are looking to sell some properties. We're looking at 21 properties across 2 blocks on the west coast of Scotland. Direct to vendor. And people think, well, how does this work? It only works if you take these actions. We can use Country, we can use local magazines, community newsletters. There's things in the community that where you wanted to do it. Go to business events. Don't just go to property events, go to business events, because there's going to be other people there, other investors. Just because it's not property, they'll still have a high chance they've got those buy-to-lets with that. And those other investors as well. As we mentioned, there are landlords who are wanting to get out the market now. I'm speaking to so many just now. I've said, you know what, I've done it for years now. I'm wanting out. I've had enough. Great. That gives us an opportunity for a discussion. I don't want to spend time on where we find them, because we talk about this in our trainings. A number of you know that who spent time with us. I want to talk more about some tips on how to communicate and build this, because a lot of people get this wrong. So for example, as I said, the couple I was speaking to this week and I'm working with them just now, they were filtering through their Facebook ads, right? They've got the money to run the ads and they're filtering them through them. a lot of calls to go and get it. And you've got to remember, when we are going direct to vendor, it is a sorting game, all right? And it is a game. We're sorting through the people and their challenges to find that little golden nugget. Yes, the estate agent is very much the same, but the estate agents have done some of the sorting for us already. So with this, what we need to understand is we don't go out and buy 3 properties or get 3 leads and that change our lives. What we have to do is sort through them. And if I can use an analogy, pretend it's like a pack of cards, all right? So you've got your pack of cards, you turn it over, it's a 3 of spades, that's not a deal. You turn over the Queen of Hearts, that's not a deal. What you're looking for is you're looking for the aces in the pack. And you only do that by having communication, all right? And the best form of communication is verbal communication. Going through email or text or WhatsApp, it's not as good as having that verbal communication. And the main key is they've contacted your advert, whatever that is, or your communication is face-to-face for somebody. They've contacted you for a reason. Your priority is not how much they want for the property, it's the opposite. It's why have they contacted you? Your key focus is, I need to find out why they have contacted me. They've responded to my communication, my advert, for whatever reason. I need to understand that. And that's the biggest mistake people make. They think it's about them buying a property. It's not. It's about you finding a person through your marketing that's got a problem. They've contacted you because they believe you're the solution, and you need to find out why they've contacted you. And you do that by listening and asking. And when you take one of these calls, the best question you can ever ask is, how can I help? Now, there's not a glitch in sound. That's an open-ended question. How can I help? And they will start telling you why they've called you, what's going on in their life, all right? And you hear some interesting, intriguing, and some sad stories, but that's what our role is, to filter through and do that. On these calls, we do not discuss money, because as soon as you start discussing money, you fall into sales role. It changes the atmosphere and the content of the communication to a buy and sell environment. We're not there yet. We're still finding out, discovering why they called them. So if you do start saying, I see properties in that area worth 120,000, you've completely missed the point of these initial calls. Or if they say, oh, my neighbour sold their property for 120,000, if you go, oh, did they, and start discussing that, you've missed the point of these calls. We back that off and put aside. We're in this discovery mode, finding out what's going on. We need to learn this, all right? You don't learn it by listening to myself and Arden. You listen to myself and Arden to learn the skills and the techniques. You need to go and implement it. So what I would strongly suggest is that anyone you have contact with through one of your direct vendor marketing campaigns, you go and see them. Even if they've described their property and it's not maybe something you're looking for. When I started this, because no one taught me this, I just learned this through the School of Hard Knocks. I knew that I had to learn the communication. And I knew the quickest way to do it was sit in front of everybody and learn from each meeting that I had in their property and viewing their properties. And then I quickly learned it. So yes, I'll sit in the property knowing it was not one of my target properties in the area, which is going to get the rent I was looking for, but I was there for me to learn that process with that. And when I go to that property, I need to understand the personalities. I need to understand who the person is, opens the door in the sense of how they communicate and how I need to communicate with them, because we've all got those different personalities. You've seen for myself and Arden, we've got different personalities. Him and I will talk in different ways. We'll come to that same end point, but generally how I structure my sentences is going to be very different to how Arden does, just like you'll be aware in your own personal relationships and with your work colleagues as well. And we have to connect with the person who opens the door, so we have to be ready to adjust our communication. And the only way we can do that is by understanding those personalities with that. And when we have that first entrance into the property, again, we're still discovering more about them, and then we do that viewing with that. When we're doing the viewing, we're looking for them to point out the defects in their property, if there are any. Like, so for example, let's say on the ceiling, there's some water staining. You can just go, oh, what's that? Or what caused that? And let them say, oh, we had a leak in the bathroom, blah, 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 blah. All right. Don't you go, oh, is that a leak in the bathroom? Let them tell you, because that empowers your positioning when you come to put in your offers, all right? And it makes them feel as though they're giving you information honestly, that nothing's trying to be hidden with that, okay? Again, we want to find out what they want for the money. I will not do this as I'm walking through the property, doing the viewing. I will not do this personally as I'm having that conversation when I first go into the property. I do it right at the very end. It's as I'm leaving the property. And there's something called the Colombo close. It's a very simple sales technique. It's a bit like this takeaway that you sort of, you say, you can have it for that, but actually I'm not going to give it to you for that. And it's very subtle. And literally, because you've not talked money in the telephone conversation, you've not spoken money about when you've been in the property, you've just been very vague about it, they're starting to think, are they interested in this? Because everyone else would ask about money. And just as you're leaving, you literally turn around, thank them very much, you turn and go, oh, by the way, what value do you have in the property? Oh, by the way, how much are you looking for in your property? And they go, I can't take any less than £100,000. There, you've got it. You can do that with a property in the market. You can do it direct to vendor. You now have a line in the sand of what they are looking for. Now, when you run your numbers, of course, that your figure could be different. It might be the same, it might be more. It just depends on what they are looking for. But the key to being successful direct to vendor is building that relationships. It was quite a few years ago, I was at a function, a lot of property investors there, and I trained quite a lot of them. And one chap came up to me who had met briefly in some of the events, and he's talking about going direct to vendor, and he wasn't getting the deals. And I said, well, explain your process. And he was getting the calls to his adverts. He was sitting in people's houses. And what it turned out was, after the viewing, he'd sit back down and go, right, what I can do for you is this, or you want to accept that. Would you do this? Would you do this leaps option? Would you do this delayed completion? Would you take this price and I'll pay you more later, etc., etc. And he always got no, no, no. I said, okay, let's reverse roles here. Let's say, for example, I ran the ad, okay, and you responded to the ad. I had a conversation with the phone, and I said, I'd like to come and see the property, and you said, yep, great. I came and I sat in your house. We had the phone call from that advert, okay, and I start really dealing to you. How about this? How about that? How would you feel? You think, oh, you're trying to take advantage of me. I went, exactly. This is what you need to do. And I went through very briefly my process. He contacted me about 2.5 months later by email, and he went, Chris, I can't believe it. I am now getting yeses to my offers just by changing that adjustment. Instead of trying to close a deal here and there, by actually building the relationship, I can then go and get the outcomes that I'm looking for. So just some very quick tips there. Treat the person with respect. It's a relationship. It's build trust, know, like, and trust. That's why you want to spend time with them when you first go in that property, having a conversation about what's going on more in their world, and they'll give you more information, and there's more connection there with that. There are lots of spaces where we can go and find the concerned sellers. They've got properties, they've got pressures on it, both their own residential and maybe their rentals as well. You've just got to go out and connect with them, whichever way you want to do it. Pick 2 or 3 methods, focus on it, and keep on doing it, and keep on doing it, and keep on doing it. So, for example, if it's flyers, when you go to your investment area, if you're an active investor, then make sure you're going to commit every time in that area, doing some viewings or doing some area research. I will put out a minimum of 100 flyers, and just keep on doing it, keep it. You will start seeing results, because it happens to those who take the action and keep on repeating it again and again and again with that. So some things there to take on board and to think about. So back to yourself, Mr. Hanley.
Well, there we go. True to form, when Chris and I are involved, we run about 10 minutes over what was publicised, but that's pretty good. I did wonder when we were putting together the presentation whether we might be about 25 minutes over. So I think we've done okay with the timekeeping, but we do have enough time for a couple of questions. I know quite a few of you have thrown in some thoughts and comments as we've gone through, which we very much appreciate. But now I'm going to steal a phrase from Chris that he said you should use when you're direct to vendor, is I'm going to say to you guys, How can we help? Is there anything that's a burning question about something that we've covered this evening that we can touch on here and give you some help or support with in this environment before we wrap up for this evening? Kevin, thanks very much for the comment. I'm glad you found it interesting and insightful, and thanks very much for all of your tips as well, sharing with the group going through. Really good contributions. Chris, very happy to give you the updates as well, and glad to hear that you're looking forward to being part of the network too. Very much looking forward to seeing what you contribute as well. I know there was a question earlier about PATMA I mentioned, which was the extension that Petra flagged up. That gives some price history information and interfaces with Rightmove as well. Now, Miriam, I think you asked about that. I've got to be completely honest, I don't use that particular tool myself. I generally go to home.co.uk, bit of a creature of habit. I know that Chris is the same as well. But if you put a post into the main feed of Wealth Labs, Miriam, I know that you and Petra are both members, and maybe put a shout out there that you're looking for some help on PATMA. Hopefully Petra will see that and be able to give you the lowdown on that as well. Last thing I want to say just before we finish off this evening is thank you guys all for joining. We very much appreciate it. We're going to do another one of these next month as well. I'm just waiting for Nelly to kind of give us some scheduling and things like that, but that will come up as an event in Wealth Labs. In the meantime, if you need any further support in growing your property business, just a reminder, Property Foundations available in the Property SQ2 section of Wealth Labs. We're taking enrollments for April. That's really good if you're near the start of your property journey, want some support as you get your foundations in order, growing your business in a group environment, learning and coaching. That's available. We're taking enrollments for that now. Property Expert Community, this would be great for all of you to be involved in. Yes, there's a fee associated to that. But it's up there now as a founding member's special price for you. The idea behind this is once monthly webinars, probably a little bit more technically advanced than what we've done this evening. Also a growing and ever expanding resource library to support you in your property business, and of course networking with your peers as well. And final thing to mention, coming in April as well, the Residential Property Investment Masterclass. If you are interested in that, want to know a little bit more about that, please do send myself or Chris a direct message on Wealth Labs as well. And we're more than happy to give you a rundown of what's involved with that and tell you how you might get involved. Guys, thank you for the questions and comments as we went through. Thank you very much for joining us this evening. Apologies for running a few minutes over, but hopefully the detail and information was worth it. And finally, Chris, thank you very much for giving up a bit of the Tuesday evening to help and join me in hosting this webinar.
Absolute pleasure, Arden, and yourself. Thank you very much for all your input. Everyone, fantastic having you all here. Thank you for your time, and we look forward to helping and supporting you in the coming weeks, months, and years. So speak to you all soon. Thank you.
Thanks very much, guys. Bye-bye.
Bye.